Welcome back to Multifamily Unpacked. We're recording this episode right after NMHC Annual 2026, which makes this a great moment to pressure test where the industry is actually heading. In this episode, we get into how cost pressure is changing operating decisions, where AI hype has faded versus where it's starting to really matter, what the funnel and Elise AI coverage really says about competing visions for AI and multifamily, how capital and consolidation are reshaping operators, what recent federal policy signals mean for housing, and why ZRS Management's decision to standardize on funnel across 110,000 plus unit portfolio is worth paying attention to. Let's get into it. Before we jump in on today's episode, a quick heads up. If you're interested in going deeper on any of the themes we cover on this show, they tend to be AI, centralization, how multifamily leadership is evolving. That's exactly what we focus on at our annual conference. The forum brings together more than 100 multifamily executives for candid, peer-level conversations. This year it's happening March 24th to 26th at the Camelback Inn in Paradise Valley, just outside Scottsdale. We'd love to see you there. The link to register will be in the show notes, or you can go to funnelleasing.com/forum. We're recording this Thursday, January 29th. NMHC Annual just wrapped in Vegas. It's known as the infamous Blue Blazer event, where the industry is heading. Tyler, I think, and I'm glad you were not wearing a blue blazer. I think we had a conversation about the blazer you wore earlier. But after a few days of conversations with operators and leaders, what stood out the most to you, and what do you think people are under or overestimating right now?
Yeah, no, I definitely did not wear a blue blazer. Wasn't pink though. Wanted to respect the stodginess of NMHC Annual, so I wore a gray blazer that you bought for me. So thank you. The vibe at Annual this year, I came away feeling it was down, that it was pretty pessimistic. Our good friend of the pod, Jay Parsons, posted that he thought it was neutral. And if we're calibrating between negative and neutral, I think that gives you an overall sentiment of the industry right now, at least as it relates to this type of demographic, which is asset managers and investors, deal makers. And I think that is a fair framing. It tells you that we're in a tough time, no matter what. It is a challenging market for multifamily, which we'll unpack in a second. And it also, a little bit of that variance certainly depends on the markets that you're in. If you're in Denver, Colorado, Salt Lake City, Utah, Austin, Texas, even Tampa, Florida, you are feeling like, I don't know that rent growth's coming back until 28, right? Like they're looking pretty far out. I know sarcasm. I thought this executive was joking with me, and they told me 2030, right? When they think that rent growth is coming back. And that boils down to the fact that we know there's been a wonderful, for American renter, influx of supply to the market. What we didn't anticipate was that demand would drop off. It has dropped off for various reasons that have been unpacked in many economist podcasts, but demand has dropped off. Supply has not dropped off very quickly. We're still working through a backlog. There's still units coming online. And then probably the most surprising, even beyond the fact that demand dropped off, was that there are still deals breaking ground. We're working through a backlog of new inventory. There's a lot of capital that has an incentive to build right now in the marketplace. And so all of those factors lead to, generally speaking, again, pro-American renter type state, where I've got several family members that are renters. They're very happy. The renewals are not going up. But if you're my dad, who's an asset manager, if you're a lot of these blue blazers, it's tough because the deals don't pencil anymore, because ultimately every asset in the world wants to be able to get in at X and exit at Y. And so it's hard to put money to work when you're not sure how you get to Y. So we're still in that world. What I will say for the operators listening, for the technologists listening, is that turns the conversation, of course, to what can I do about it? And if rent growth isn't there for a couple of years, it only really leaves one lever. That lever is cost. It's the cost side of the equation. Interestingly, I noticed that a lot of the folks that thought that AI was the silver bullet a year ago have recognized it is not that, but it is an incredibly powerful tool that they need to continue to understand and unpack. In particular, as you referenced Forum a second ago, how can I plug AI into centralization? If I can't reduce headcount at a 3-person property at a staff of 3, perhaps with centralization, I can run more efficiently. So I think we're going to continue to see a real focus on operational excellence, because there's no easy answers. But my takeaway from Annual is that folks have come to terms with the new reality, which is rent growth not coming back anytime soon. And therefore we need to embrace operational discipline if we're going to drive cost and unit improvements.
So let's lean into that AI discussion in particular. There's a very solid piece out from Brad Hargreaves, who writes Thesis Driven, framing some recent developments between ourselves and Elise AI. As Brad points out, the story is really more about the proxy fight over how AI shows up in multifamily operations. Funnel really came up as a CRM built for centralized, human-led leasing. We have since developed a ton of AI tools that obviously supplement those teams in the mundane and the day-to-day. Elise started more with the lightweight AI handling conversations and has expanded further into leasing with their free AI first CRM, where things have collided, it seems, is more at the integration layer. So Funnel's push for tighter integration terms to keep PII and protected work and data inside our CRM as the system of record without having things in many cases manually pulled into Elise's free CRM. Elise has pushed back saying that limits competition and how their AI learns. A client quote from that article reads, "I'm a big, fully invested customer of both. We're intimately involved in both products, fans of both. I love the two companies are having an arms race of innovation. But everyone should play nice in the sandbox. If I'm Tyler, I get it. I would feel the same way. I'd think we didn't integrate with you the sense you were going to play dirty within the integration field." At the core, this comes down to two different bets on the future: AI assisting humans versus AI doing nearly all of the leasing and sidelining some of the teams. Tyler, anything you wanted to clarify about the article? We've obviously heard a buzz about it. And can you share some perspective on where we see the future of AI as working alongside teams differently than some other vendors in the space?
Yeah, for sure. First of all, I never met Brad before he reached out for this article. We didn't ask him to write the article, and everyone should follow Thesis Driven. He does a fantastic job of writing on the prop tech space and really grew to respect his professionalism as a journalist through this process. So thank you, Brad, for doing as fair a job as possible. And I think that my next point would be that we tremendously respect the Elise AI team. I love the quote that said it's an innovations arm race. How great is that, right, for the industry? It'd be one thing if there's one technology that can, the best centralization tool, the best AI tool, you don't need anything else. So it is great that you have two well-funded, really ambitious teams trying to solve problems for this industry. We love competing with them, respect them, and know that it's a big, big industry. There's room for plenty of us or multiple vendors to win in this space. I think that the only thing that was a little bit unclear to customers in the industry that I want to make sure we make clear is that there's multiple assertions or references that perhaps this integration may go away. And I get why that came up. It worked at Entrata back in the day when the Entrata Yardi integration had a sunset date and customers were forced to pick sides. That's never been the case here. We've never put a date out there and said, oh, we have to have this resolved by a certain date. There's not a single customer that we've ever approached and said, if you don't turn this off, X is going to happen. Of course, we don't want to disrupt our customers. And of course, we want them to have choice and competition. The only thing that's really changed is that until we can come to terms with the lease on, to your point, a securing the data and an integration that is scalable, much like we have with Apartment List and Perk and many others, that it doesn't make sense to add new customers to that. But I'm confident that we'll figure that out and we'll be able to continue competing and cooperating in the industry. Most interestingly, as you pointed out, though, is the way that Brad framed the conversation and that we are gladly to be placed on the side of AI plus humans. We've always believed that humans play a critical role in this industry. I believe in the future of autonomous driving. Alex, you and I have been in Waymos across the country. I do not believe in purely autonomous leasing. If so, these are boxes and there's no differentiation. There's no need for property management companies. I believe in property management companies. I believe in differentiation and service. And because of that, Funnel has built its product to really embrace the human elements of leasing while automating away the mundane as you started. And so I think that, again, Elise has done a fantastic job of really pushing the boundaries on some of the components of AI. I mentioned earlier that a lot of operators they had this idea that AI was going to solve everything, and it didn't do that. But there are a lot of folks that recognize, okay, I'm not going to zero, and I don't want to go to zero, but there's still incremental gains I can find through automation, centralization, and the latest AI technology. So for instance, Funnel's partnership with Sierra brings the world's best voice AI product to our customers, and you can genuinely reduce your need to staff 24/7 because renters love talking to our voice AI product, right? And to give Elise credit, they were one of the first to do voice AI really well. them plus our acquisition of LeaseHawk really pushed us into voice AI as a big lever for cost savings. Yeah, I think that it's the right framing, that it's an innovation arms race and we love it. We're here for it. Certainly the integration is not going away. We're not sunsetting it. We're going to continue working in good faith with our partners and with the lease to sort out the areas where we're going to disconnect. And in the long run, though, it's clear to us the future is AI plus humans, and we're going to keep leaning into that.
To your Waymo comment, I'm not sure I even fully believe in a fully autonomous driving future based on some experiences we've had. But anyway, TPG Real Estate just announced they acquired a majority stake in Cortera, Lennar's multifamily development platform. They paired the deal with an additional $1 billion capital commitment, signaling clearly a long-term bet on scale and operating discipline. Earlier this year, Cortera merged with RKW Residential, creating a combined platform of 52,000 plus units, more than $20 billion in assets, underscoring that this is less about a one-off acquisition and more about building a scaled, repeatable operating engine. RKW, we should mention, is a funnel client and owned by prop tech company Alfred. Tyler, does this kind of investment signal that capital is now prioritizing repeatable operating models over individual assets? Or do you see the same shift happening on the operation side as AI and centralization become table stakes?
I certainly think those are true, but I would actually frame this news as a continuation of the reshuffling of the deck that we're seeing in multifamily. So we started off by talking about NMHC Annual, and while there's not a ton of deals changing hands in the traditional sense of 2021 level buying and selling of properties, there is a lot of reorganizing. I, in the last week, have heard of several more that are on the way. There's more management companies that are going to be closing, and they're going to be, the management is going to be farmed out to large third-party managers. And in this case, this is more of a continuation of the story of Lennar changing its approach and in some ways exiting the multifamily space, focusing in on its single-family build, and ultimately landing in a place where Alfred got bigger. Alfred is a larger third-party manager now than they were. And that theme is going to continue. We do not know exactly how this reshuffling of the deck is going to happen in multifamily, but I would bet my bottom dollar it results in larger operators, fewer boutique operators, particularly as property management companies, as third-party managers, unless they are hyper localized, right? Like we are the best in class operator in San Antonio, Texas, or they are leveraging best in class technology. Some of Funnel's customers that may be sub 5,000 units, they operate as well as, if not better than, some of the REITs in terms of the FFO and the way that they leverage AI and centralization. So that's my bigger takeaway here, is that we're going to continue to see restructuring of asset management, fee management relationships in the industry. There's more of this to come. I'm sure on the next report, we'll be talking about some of the other ones that are moving around. But the mega managers that we've referenced on the past are going to get bigger.
President Trump recently signed an order targeting institutional housing investors. This executive order goes after institutional ownership class, specifically in single-family rental, not multifamily as far as we know, but for now, it mostly kicks off reviews, definitions, potential legislation rather than real enforcement. Build to rent got carved out, timelines are a bit fuzzy. Even what counts as a large institutional investor is a little bit TBD. The bigger tension we seem to be focused on with this order is who owns homes. While the real problem obviously hasn't changed, we're short millions of units. Buying is still materially more expensive than renting, and access to mortgages keeps tightening in spite of Fed rate shifts. Institutional investors still own a relatively small slice of the market, and in many cases, private capital's been filling gaps left by banks rather than driving prices on its own. There was another Globe Street article titled "How a Single Trump Tweet Froze a $70 million Deal," which showed that nuance could land pretty differently in practice as well. So capital's reacting to some political signals, not necessarily technical definitions, and many lenders are treating anything near SFR as a potential headline risk. The result is more of a chilling effect. Tyler, what's your take on not necessarily this order itself, but the general sentiment behind it?
Yeah. Funnel, we're neither red nor blue, we're pink. So this is not a political commentary. This is a pro housing commentary. And as somebody who I've been very fortunate to travel around the world and lived overseas, America's housing economy is the best in the world. The quality of housing that we provide and the service level that we provide is second to none. I feel very strongly about that. And it is a result of housing being an asset class. And the best example you can look at is that what we led the show with again was the fact that rents aren't growing in America. That may be bad for folks that are asset managers and they got to figure it out and they got to get innovative. It's great for renters, right? It is unquestionable at this point in time that over the last couple of years, the influx of capital into multifamily real estate has resulted in a better state of living. As I mentioned, I've got lots of family members that are renters and they're better off because of the influx of capital into this space. While I understand the potential disconnected logic of institutional buyers buying homes away from first time buyers is bad, it doesn't match the reality on the ground. And if you want to dive into that, I'm going to send you back again to our friend Jay Parsons. He wrote about this extensively, he has a whole podcast on this. He can unpack it in data for you better than I can. But our point of view, our kind of core argument is that anything that has the impact that you just articulated, which I heard firsthand this week in the market, which is chilling, which is people won't touch SFR now with a 10-foot pole because of potential regulation. That looks to me like the same rent control effect that we've seen in places like Toronto, Canada, where well-intentioned legislation resulted in subpar housing and increased costs. And we're pro free market here. We're pro more housing. And I think that the data is pretty clear on this. Last thing I'll say that I also can speak from this as a former quote unquote institutional renter. I rented from Progress Residential. Shout out to my friend Dave Feldman and the folks at Progress. It was an incredible service that they provided to me and my family of actually creating rentable housing in a school district that I wanted to be in when I moved from New York to Tampa. They provided high quality service. And candidly, it was actually much more affordable than going from an individual landlord. It was easier to find and it was very pro renter. And as somebody who's used that institutional class and used it to get a foothold in a good school district for my kids and save money to be able to purchase a home in said school district, I think that the notion, although I'm sure well-intentioned, is we align with the majority of multifamily or the majority of rental housing folks that think it will not have the desired impact.
We're going to wrap up with this. We were honored to announce that ZRS Management, the 13th largest NMHC manager, selected Funnel as the enterprise CRM and agentic AI platform across their 110,000 plus unit portfolio. We also got some really great data already. Properties using Funnel's products saw 115% more scheduled tours per property and 227% more completed and walk-in tours per property, along with a 26% higher tour completion rate, 53% lower cancellation rate, 50% reduction in no-shows. Tyler, you were very close to this deal. You and Jackie and her team have spent a lot of time together. Give us a little bit more of the why behind they went with Funnel at the end of the day and what you think that signals for other large operators.
Yeah, I think that what it signals is that, again, even in tough economic conditions, you can continue to improve performance. And I think that, like I said, folks that have embraced the fact that it's going to be a tough couple of years in the rental housing space are not sitting on their hands. They are investing in technology, they're investing in operations. And ultimately, we, and I would advise anybody, it doesn't need to be Funnel, found a partner that was aligned with our objectives. And the impetus for this partnership was I had the chance to attend the ZED conference in Fort Lauderdale, wonderful conference put on by Jeremy Brown, the head of marketing there. And I got to hear Jackie, their COO, Darren, their CEO, speak. And it was very clear to me, these are folks that believe in AI plus humans. These are folks that believe in we can provide high quality of service while still improving our operational efficiency. And so just thrilled with the results, not shocked by them, given the alignment of the companies and what we were trying to do, and really excited for what this means for their clients, right? Their asset managers who hire ZRS to deliver excellent outperformance in tough markets. So yeah, just very grateful for that partnership. And for those folks listening, you can continue to outperform. It does require investments. It does require changes sometimes, so it can be painful. But probably the coolest part of this whole story is that we were able to migrate that portfolio in about 60 days over the holidays, which also, one thing that it always makes me pull my hair out is that sometimes and I've done this here at Funnel with our tools, you just take forever and you get into analysis paralysis. When you're aligned on an objective and an outcome, you can accomplish it in record time. So just major kudos and thank you to the ZRS team for trusting us and excited to improve on those already stellar results.
Thanks, Tyler, and thanks for listening.